All right, welcome to another episode of Money Ministry. I'm your host, Craig Mack, and the gentleman you see on the screen there, that is Faison, aka Big Worm. And what we're going to do is, on the previous segments of the channel, I went through uh, the different indicators for charting, your technical analysis. I also went through how to set up your brokerage account so that you can get started uh, with investing. And so you've been provided all of the tools that you need to get started with your investment journey. I've also published a book, Get Good at Money, and that's available on Amazon and Barnes and Noble. Soon it will be an audiobook as well. So with between the book and this channel, the content that I've created on this channel, you have everything you need to get started. So what we're going to transition to now is the more advanced of how to use that information in order to make good investment uh, decisions. And one of the ways that you can do it, my son here, Faison, is very good and very knowledgeable in options, and he's going to be joining me from time to time to give his input on options, that viewpoint, and then for those of you that have been with me from the beginning, I'm going to continue to provide the long-term investor uh, uh, um, vision or lens on how to invest in stocks. Okay. So, with that, as I've done previously on the previous segments, I am going to share with you my progress to let you know that I am in the trenches with you guys. I'm not just here talking about it, but I'm actually in the trenches with you. So far for the year, I'm up 29.42, okay, since January 2026. Right now, I've got a return of 15.59. I am still beating the NASDAQ and the S&P. Earlier this year, I was beating them both combined, but with the pullbacks that have taken place, I'm still beating them, just not as much as I was before. Okay, so that's where I stand right now. And for the month of July, I'm taking it on the chin a little bit. I'm down $2,088.88. Okay, but I'm showing you this because I'm in the trenches with you. I don't show you my portfolio because I want this content is about teaching you how to fish. This is not about giving you stock recommendations. And while I'm on that subject, this is for educational purposes only. I am not a financial advisor. I'm not a licensed professional. I'm only giving you my take and I'm sharing my knowledge with you to educate you, okay, on what's going on with the market and provide you with that information. Okay. So that with that, the lawyer should be happy. Nobody should be coming after me to sue me. So I'm good. All right. So with that, I'm gonna pull up the S&P and right off the bat, Faison, I tend to look at as I do my top-down analysis, I always start with the 10-year view of the S&P. The S&P is what the pros use to gauge their performance. And so I'm looking at the 10-year view of the S&P, and that's what this is. And as you can see here, I've charted um, the channel that I see the pattern that we're trading sideways right now. Um, so that's what I see. Now, as an options trader, do you guys look at that long-term view, or you just take the snapshot of a month or whatever?
Yeah, that's a good question. So, as an options trader, right, there's different types of traders. There's people that trade leap contracts, and then there's people like me that trade every day.
Okay,
I'm considered a day
before you
trader.
go into that, you
Yeah,
got to explain what's a leap contract for those that know.
sure. Yeah, absolutely. So, a leap contract are contracts that people might buy with further expiration dates. So, for those of you that don't understand that, with options trading, you're pretty much buying time. Okay, that's the majority of what makes up what that contract is worth. So if you're buying a lot of time, which could be 12 months out, then that means that you're doing a leap contract, a leap purchase, right? Whereas for me, I'm a day trader. I like to know. I'll tend to trade contracts with a little bit closer expiration dates. So sometimes 2 weeks out, or maybe a couple days out, like a weekly contract. But nonetheless, with options trading, you want to trade with the trend, right? And with momentum. So yeah, we would definitely start with a higher time frame analysis. And just like what you said, the market's been absolutely consolidating and just ranging for like I think 80 days last I looked. So hasn't really
Right.
been much of an opportunity.
Yeah, according to this chart, it looks like it's been going on since May, since
Yeah,
first
it's been
part of
a
May.
while.
So
Hmm.
here we are in July, and it really hasn't moved one way or the other. Now, what I do see on this 10-year chart. And I use the 10-year chart. The reason why I've been focusing more on the 10-year chart, especially this year, is that the 10-year chart provides you more data points. And so to me, it gives you a more realistic view of the trend because it is using all the data that's been accumulated over a 10-year period. And it's a more reliable way to gauge what the movement in the market is. And it helps to add discipline to your investing because you won't overreact to a sudden change in the market by looking at the 10 year as opposed to when you're looking at the 1 year or 1 month chart, you may have a tendency to react to a change in the market when it may just be just something temporary, but yet you sold when you probably should not have. Okay. So with the 10 year now, I look at the MACD and I'm looking at the MACD and it's narrowing. It's getting closer and closer to the signal line. It is also at a level where previously it tends to go down. It reaches its peak and it's at that level now. And it seems like it's starting to drift downward. Okay. Long term. Keep in mind, this is long term. You're also in the stochastic. You are in the overbought territory. Okay. So the risk is more downward than upward. And if you look at the accumulation distribution lines, which is what measures what the pros are doing, the institutional buyers are doing, it is starting to drift downward. It's been trading sideways just like the market, but right now the trend of it is downward. Okay. Your volume, you have more selling than buying here, right? Increase in selling. And then your relative strength line is pointing downward, and your money flow line is pointing downward as well. So for me, adding all that up, uh, I think that there's some more side, downward pressure that's going to take place in the S&P. Would you agree with
Yeah.
that, Faison, or?
Yeah, so an all-time highs typically historically whenever you're at all-time highs, and this could be when Trump was in office, this could be during COVID times, price continued to just shoot to the upside. Well, even with all these IPOs that's been releasing, price has not been able to make new highs.
Mm,
And that's where we've been. We've been in this range in the S&P since May, like you said, and price has not made Tesla, Nvidia, none of these companies are making any more all-time highs than from before. So with that being said, I think we all are kind of anticipating some type of pullback. Prices just kind of been shooting to the upside since early January. So I do think the market is due for a pullback and some type of relief, which would lead us to some good buying opportunities for some of your favorite stocks, right?
hmm Now, let me ask you this. I mean, I know you're mostly in the options, but if you were a long time, would you sell right now, lighten up and raise cash right now?
It's hard to tell. Like I said, with all these IPOs are gonna be released, you just had SpaceX IPOs, and everyone saw an absolute rally at market open when it was released, and now it's sitting at I think a little bit under $130, a little bit less than the
Yeah, it's
opening
underneath his
strike price.
IPO price.
So you got Anthropic that's coming up next, and you got a few other AI companies that are going to drop their IPOs that all these investors are kind of sitting on the sidelines waiting to jump on board. So I think that's why the market's kind of been sideways for a little bit. Everyone's kind of been holding on to cash and waiting to see what the next best thing is going to be when it gets released. But if these IPOs and these companies don't live up to their valuation, then the entire market is going to be due for a correction. And I think that that's going to resemble something to maybe the internet or the dot-com bubble from before
Mhm.
where a lot of people realize that these companies aren't worth what we thought they were worth, these trillions of dollars that they're raising.
Mhm.
So yeah, and if that happens, then like I said, this might be a good time for your favorite. Just keep your eyes on your favorite companies and get ready to sit on cash and take advantage of the buying opportunity when it happens.
Yeah. Well, I see it a couple of different ways. I see, first of all, IPO stands for initial public offering. That's when a company first gets listed on the exchange. Okay. And what I see with those is what people need to be cautious of is the lockout period. Okay, because you have a lot of the initial investors when the company was private, they were stakeholders in the company. Once it becomes public, they have to hold on to their shares for a certain period of time. And then when that time frame expires, called the lockout period. When that time line expires, then they're able to sell. And they can take huge profits depending on where the price is. For example, in the case of SpaceX, I think it'll be this fall. I think maybe around October or November when the lockout period expires. Depending on where that price is, there's going to be a huge amount of people selling. Those employees that were gifted shares of the company when it went public, or when it was still private, and maybe even gotten even more when it went public, they're going to sell. They're going to be probably instant millionaires, so to speak. I think Elon Musk's period is a little bit longer further out, but I think it's before the end of the year. So there's going to be a lot of selling taking place with SpaceX, and you may be able to get it if you still are interested in the stock to get it at a cheaper price. The other way that you could play your current portfolio is that you can take some off the top. If you got some profits, you could take some off the top or off the table and wait. And if your stock goes down, even though fundamentally, financially and with the earnings reports, if it's, fundamentally sound with its financials, it's just dealing with the market right now. The company didn't do anything wrong. The price is going down because people are selling stocks. You can sell a little bit, not all of it, but you can sell some of it and then wait to recoup those shares, but buy them back at a lower price to increase your profitability. So those are just a couple of different ways that you can play this. Okay, so this is the long-term view of the S&P. So let's look at 1 year. What's it doing in the 1 year? And again, we see the sideways movement of the market of the S&P. Okay, and if we look at the indicators, they're pretty much showing the same thing. Except your stochastic is now you have a cross here, they call it the death cross. It's crossing, and now it's just peeking out of the overbought territory, but it is trending downward. Your levels are picking up a little bit, but they're picking up where there's more selling than buying. Okay, your relative strength is pointing downward, and your money flow is flat. So I think adding all that up, I do believe that we have some more downward pressure that's going to take place. Okay, so let's flip over to the Nasdaq. Okay, the Nasdaq is basically full of tech stocks. Some of the IPOs appear there, but it's mainly technology. Okay, and it has a downward triangle is what this is called. All right, downward triangle, and it's touched the 20-day on the 10-year. But you see here, the MACD is pretty much close to crossing. Now, when this happens, the MACD is considered one of the most reliable indicators of the indicators. And when this happens, it's going to trigger the algorithms that institutions use to buy and sell their stocks. It's going to trigger a sale. All right. So there's more downward pressure that's going to take place in the NASDAQ. And it kind of shows it's already started. You got more selling than buying on the last session, or at least for the last month, the last week, because this is a weekly chart of the 10-year. But you get downward pressure on you're showing weakness in your relative strength indicator and also your money flow. So there's more downside coming in the NASDAQ. And again, this was the 10-year chart. So we're going to flip over to 1 year.
Yeah.
Yeah.
Yeah, the Nasdaq hasn't. I think we've been in like a 2,000 tick range on the Nasdaq for since May, and historically the market has never been in a range that large and that long before. It makes you wonder what the investors and everybody's been building up for. Uh, I have a strategy to where we can anticipate when the institutions enter and exit the market based on an algorithm. And it already hit its level. We anticipated when price was at all-time highs around 31,000 for it to retrace down to 28,005, which it already hit.
Hmm.
But if the Nasdaq doesn't hold the 28,005 level, the low that it had before, then we
Hmm.
can potentially see another, I don't know, thousand ticks to the downside to maybe I'm just looking here, minimum 27,700. But if 27,007 doesn't hold, we're definitely gonna see closer to, I don't know, 26,000 in the Nasdaq. So that's quite a ways down, especially a pullback from all-time highs. We would love to see market continue to rally and continue to shoot to the upside, but just gonna be honest with you, the way technology is advancing and the way that these companies are emerging, and there's so many different tech companies throughout this AI sector now that it's just going to spread out. You know, it used to just be all their chips in one basket. Now they're all kind of
Yeah.
spread out to different companies.
Yeah, we're gonna talk more about AI and the AI trade, infrastructure trade
Hmm.
here in a minute. But what I see is, it the Nasdaq is at 25.5 right now, 25.512 right now, and it closed below its 50-day. Okay.
Yeah, the numbers I'm giving you are the futures,
Oh,
the future
got you.
contracts. Yeah.
Okay, got you. Yeah, I'm dealing with the present right now, and it's
Uh-huh.
and you're 13.
But
Go ahead.
Go ahead. Yeah, but
Oh.
even still, we use a lot of us day traders. We use a few different instruments to kind of measure the market,
Hmm.
and it's only because we need real live data, like live
Yes.
time data. So,
Right. Right.
but nonetheless, your bias is still correct that we can potentially see another 1,000 point drop in the market.
Yeah. Well, because
Hmm.
it crosses 50-day and your 20-day is pointing downward, and it may very well go below the 50-day. Okay. And then you got your stochastic again, it crossed and now it's going downward. Now your institutional bias seem to be hanging in there. So that's a good sign, but it's still
Hmm.
showing, the relative strength is still downward and your money flow has flattened out. So,
Hmm.
um, so let's switch gears now and let's talk about the AI trade. Now, my take on it is this. I think that it it's cool, but it's not over. And a lot of people think, or, a lot of the talking heads out there is like, oh, it's over. I don't think it's over. I think that the front end of it, the chips being made and all that, I think that that has to slow down so that the supply can catch up to the demand, is what I think is happening. And, with the memory chips that need to be developed, because Taiwan Semi just reported and they're saying, hey, we still have a huge backlog and demand for manufacturing chips. They see no slowdown in the AI build out. Okay, that's what they just reported.
Hmm.
So I think the AI trade is alive and well. It's just that the front end needed to slow down just a little bit to allow the bottlenecks that are taking place to catch up to the level of demand that's taking and the spending. That has to slow down just a little bit so that the suppliers can catch up.
Yeah, just put it like this: every city, every state in the United States will have a surveillance. So we are nowhere near fulfilling all the orders that a lot of companies and manufacturers are asking for. And then I just followed another company who said that we're still way behind on memory. Memory is the biggest issue right now. And that's why they're pushing for these data centers and it's growing substantially. So you can have all the tech in the world, but you need just as much memory. And I know you're big into the manufacturing part of this tech sector, which is great because you're gonna have to have chips for memory anyway.
Yeah.
But that's just to give you an idea. We're nowhere near the end of this AI evolution.
No, I agree with you. And also, heard a report the other day. There are approximately 800 data centers currently being built right now. 800.
Does that count the ones that China are putting underwater?
That's a good question. I don't know. But yeah, that's the other part of it. People tend to think that they have a very narrow lens. They think this is just America. No, this is a global phenomenon that's happening. All the countries are trying to get, into the AI race. Okay, it's just that China and America are taking the lead right now. And I mean, it's a very narrow first and second right now. So, but here's the thing, and you and I talked about this months ago. All the data centers being built, the one number one thing that they can't get around, energy. They got to be powered. Now,
We gotta
there
have
was
energy.
some legislation passed here recently. It hasn't fully kicked in yet, but there's legislation being that was passed, this law, um, that and it has to be executed soon. Whereas they said data centers have to be their own energy supply. They have to supply their own energy. Okay.
Interesting.
So they can't plug into the grid. The grid can't handle it.
Hmm.
They have to come up with ways to have their own power to stop so that consumers don't bear the brunt of the increase in demand and that their energy costs skyrocket. Okay,
Hmm.
so that takes me to a sector that I want to look at, the XLE. And see, I use these indexes to give me an idea of what sectors are starting to bloom and are turning around. And so this is the XLE. And again, my default chart is always the 10-year. Now, the XLE, if you see here, its 20-day is curling upward. You've had two kicker candles. That indicates institutional buying. Okay. Now, your MACD is curling upward. Your stochastic is coming out of the overbought territory and has crossed the signal line and is pointing upward. You've got accumulation distribution. It's curling upward. Institutional buyers are starting to buy the energy sector for the reasons that I just stated. They know that that law is in place too, and it's going to be executed on. You also have your relative strength turning upward, and your money flow is turning upward for the energy sector. Also, the energy sector tends to be a defensive play against a market downturn. People tend to go towards the energy sector. On top of that, you still have what's going on over in Iran with the blockade and all that stopping the tankers from going through. What does that do? It's already happened. Gas prices go up, right? So the demand for fuel goes up. So you got all that going on. And to me, that points towards investing in the energy sector.
It's
The
interesting
charts.
you bring up energy. In fact, our cousin, my cousin, uh, he's going to California working with the company that are they're trying to, how do you say it, have these different mobile data centers and
Mm-hmm.
they have their own power supply.
Mm-hmm.
So for instance, I called him to work on a project for AI, and I said, "Hey, I want to rent someone else's basically. When you rent a server, you rent someone else's computer that's connected to the internet." And he quickly said, "Well, why don't we build our own?" All right, that sounds like a big task, but these companies know what you're saying. These companies understand that it's going to be a requirement to have their own power supplies, and a lot of these companies aren't going to be able to afford this. So they've thought, okay, well, maybe we'll put this in the hands of the consumer and let the consumer, let us lease the consumer's power supply that they're getting from solar energy. So our cousin is actually in the middle of developing something like this,
Mm.
and we need to probably find out what this name of this company is. We might not want to say it publicly. We want to get in first before everybody else does.
Right,
But
exactly. Now, I don't give stock, well, I don't necessarily give stock recommendations. I may mention one because I will mention one in this segment.
uh,
But yeah, I do agree with you. Yeah, I'll definitely, yeah, if you hear something from them, let me know. And and we'll
we
go
get in
from
before they
yeah,
do.
exactly. Hey, if the Trump administration can do insider trading, why can't I? So
Right. Actually, did you hear what he's trying to do on his True Social platform? Did you hear what he's trying to do lately?
no,
He's trying to sell a subscription where you get access to his tweets before they go
I
public on
did hear
inside
that.
trading.
Yes.
Unbelievable.
Yeah, and his teleprompter guy already been busted for
Right.
So
It's like, hello?
yeah, and I ain't mad at the guy. I
I
am
mean,
not mad.
hey, man.
He's watching what's going on. He knows behind the scene the dirt, the crookedness that's going on. He's like, why can't I get a piece of this action?
Yeah, if Nancy's been doing it for 2 decades, why can't
Yeah.
I?
So I ain't mad at him. Okay. So I think that the place to be or to consider to me is the energy sector for all the reasons that we've stated. Okay. So we're continuing down our um, top-down analysis. We've looked at the overall market, and now we're looking at a sector that might be interesting, that may be that's showing signs of recovery. So now I'm going to talk to you guys about a stock that I think fits what we were talking about. And just to recap, we were talking about the legislation that was passed, how data centers, there's still a demand for the data centers. They're currently 800 currently being built. You also have um, the legislation that's being passed that they have to provide their own power. They can't plug into the grid. So what is a good company that maybe that fits into that space to handle all of that? And so then I'm going to bring you to Bloom Energy. This is the 10-year chart on Bloom Energy. And as you can see, Bloom Energy took a dip. This is the 10-year though. Took a dip.
Make sure you mention the stock symbol for everybody that's
Yeah. The stock symbol is BE, Bloom Energy, and it's BE. Okay. And according to its 10-year chart, it's not overbought. It is the institutional buyers are starting to flatten out. They sold it, but now it's starting to flatten out. It's still in a downward trend on this relative strength indicator and this money flow. So I add all that up and I say there is opportunity. Um, please ignore those. This is back when I was
this is a
tracking it earlier, where I was in the
this is
downward.
actually a really, really good opportunity, like you said. It's just pulled back from this impulsive move. All-time high was 351,
Mhm.
and this is about a 70% pullback of that entire impulse move to the upside.
Okay.
And that's typically where a lot of large institutions like to scale into position. So this could be a very good buying opportunity as long as it holds. I'll probably be interested as long as it doesn't go below 174. I'll be a buyer for this stock for sure.
Yeah. It's also in what is called the golden zone of the Fibonacci. This is typically where tend to get your greatest amount of gain if the stock does indeed rebound and turn around and breaks out. Okay, so this is the 10-year chart of it. So now I'm going to move to the 1-year chart. And let me just, before I do that, break down what they do. They set data centers up. They use cellular energy to um, power data centers. So they provide the independent power to data centers. So they will position that data center to have its own power supply and not be part of the grid. That's what Bloom Energy does. Okay. So let me go to the 1-year chart. You can see it was trading down. It was trading sideways for a while and then it went down. Okay. But it is in its oversold territory. Again, this is the 1-year chart. The MACD is still trending downward. Your institutional buyers recently started scale, like you said, start scaling back in, right? And so your your relative strength now curled upward. Your money flow is also starting to flatten out and curl upward as well. So this, to me, is a really good opportunity to jump in. All right. So let's see if I can get to their fundamentals. Yeah, here we go. Look at their fundamentals. You got a beat here, beat, 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 beat. Love to see that. That's what you want to see. They're currently at a 0.41% margin right now. But if you look at their estimated earnings per share going forward, 3 to 5 forecast, 114% going up. You've got 3 years of increased assets, total assets, Liabilities have gone up a little bit because they're expanding, but you also have an increase in their liabilities and shareholders' equity, which is a good sign. Okay. Total equity is also increasing. You look at their income, income is increasing, um, operation income is decreasing, turning positive. Okay. Net income, it's a little bit negative, but that's okay. And then cash flow, cash from operations has turned positive and increasing. Total net cash has also increased dramatically from 2024 to 2025. So I think that these guys are on the come up. That's what I see. Um,
Yeah, I agree. I think this could be a good, like we talked about. We want to buy these stocks when they're on the way down. We don't want to buy companies when they're at all-time highs and at a premium. We want to wait for it when it's on a discount.
mhm.
And the fact that we know that this share price topped out at 351, and they've got great fundamentals. They're a healthy company. They're beating their earnings quarter after quarter. Why wouldn't you buy a piece of this company that's growing?
Right. That is filling a need, and now they have legislation behind them as well to support what they do. And I'll just go over it right quick. You know, the sells and installs solid oxide fuel cell systems for on-site power generation in the United States and internationally. So they are global. Okay.
Mhm.
Because remember, we said this AI infrastructure deal, it's a global thing. It's not just the US. Okay. They
Mhm.
do natural gas, they also do hydrogen. So they have different things, but mainly it's going to be this oxide fuel cell system for on site power generation. That is their bread and butter. That's what they're built off of. And so that fills a need. And to me, this stock is cheap right now. This stock, well, the PE is at 99.8, but I still think this is a buy all day long. Um, so anyway,
I
that's my
agree.
take on it. Yeah,
I
go
think
ahead.
this is a good buying opportunity for sure.
Yeah, absolutely. Absolutely. So that's one way that you could play it. Um, the other one that I'm going to want to take a look at is ET, Energy Transfer, stock symbol ET. Okay. And what they do is they transport energy um, to the data centers, natural gas. They have pipelines they have 12,200 miles of interstate natural gas transportation pipelines and 20,000 miles of interstate natural gas pipelines. So they've got the largest natural gas distribution in the United States through pipelines, not just through trucking. They can do that, but they have it where they can plug you into their pipeline system, the data center, in order for you to have natural gas to fuel your power supply. Okay, and run on natural gas. Okay, it's trading right now $20.32. Now they've had misses, so this is a speculative buy. You know, the margin 6.7, 6.4 as far as profit margin. But as you can see, their assets have been increasing. Total assets have been increasing. Shareholders' equity has been on the come up the last 3 years. Total revenue has been increasing over the last 3 years. Um, Net income took a little bit of a step back on their net income, but that's okay. I think that with the demand that's coming up, and again with that legislation, I think that they are going to be a player going forward. Cash flow wise, not quite where it needs to be yet. So again, I think this is a little bit of a speculative buy. But if you look at their net change in cash, that's quite a leap. So I think that they're in the process of turning around as well, and it may be an opportunity uh, for people to get into this particular stock in the because we have already established that the energy sector is on the come up right now. Now this is the 10-year chart of them, okay, and as you can see, It's been on an upward trend. It's headed towards a breakout. Your MACD is about to trigger the algorithms. Your stochastic has already crossed and is up. The accumulation line is curling upward. You've had 4 weeks of buying volume, positive buying volume, not selling. Been more buying than selling. Your relative strength is curling upward, and your money flow is also curling upward. This is the 10-year chart. Now, let's look at the 1 year. Again, bottomed out, but lately it's on the come up. Your 20-day crossed your 50. Your 200-day is curling upward. Your MACD is climbing. It's already an overbought, but this is short term. This is a 1 year, all right? Your accumulation hasn't peaked yet, so there's still, to me, room to run for this particular stock. Um, you've got your relative strength is up, and your money flow has been steadily increasing. So again, I think this might be something, another stock you may want to consider as an energy play for the energy sector.
Yep, this one is interesting. This stock was trading at $31 a share at one point, if not more. But one key point here that we haven't talked about is not only does has this stock made new highs since March 2nd of 2020. So that's 2,300 days ago. This stock has continued to the upside and make new highs, but it's been paying dividends along the way.
Mm,
So there's not only is this a company that's trading or a share that you can purchase for $20 a share, you can get paid dividends while it continues to make new highs at the same time, which can certainly accelerate portfolio growth in the long run.
exactly. Exactly.
Mhm.
So again, that legislation hasn't been executed on yet, but it's about to. And so I think that this is a company that will benefit from it. So, okay.
Yeah.
All right. That is now as far as the what I use as far as indicators, is there something different that as an options trader that you use as far as chart indicators?
Everyone has a different strategy, right? There's more than one way to eat the apple pie at the end of the day. But uh, me personally, I like to know. I back tested my strategy to know what the next five candlesticks are going to do on a smaller time frame. And
Mm,
with options, you don't really have a lot of time to let trades play out. You do when you do leap contracts, but for a
mhm,
lot of day traders that are in and out of the market every day, we need to know what the institutions are doing. Now, for that to happen, that means you need to know real time what the market's going to do right now. And if you rely on, to me personally, if you rely on indicators, then you're going to have a delay, right? Because the indicators are reading historical data, is reading what the trend of the last two, three, and it depending on what indicator you're using, it could use the last 20 candlesticks to spit out what the trends and what the buying and selling pressure looks like. So me personally, I look at the way the candlesticks print, and I can read the signature and identify buying opportunities that institutions are usually attracted to, and then I can identify selling opportunities too.
mm.
Because just as important as it is to know when to buy the stock, you need to know when you need to get out of it as well. So that's how I can identify when stocks are in a downtrend, where we can identify when they might switch trends and continue back to the upside and spot and identify reversals. And when you do that, then obviously, I'm not going to say you can nail the bottom because nobody can nail the bottom, but at least for the next, few minutes, you'll be in profit and you can exit your position and go about your day. So that's the strategies that I implement when I trade in the market.
Okay.
Mhm.
All right. Very good. Very good. Okay. So this is what we've looked at the overall market and we kind of saw what's happened in the past. So what I'm gonna do is pull up see if I can pull up the calendar. Let's see what we can look at for next week and what's coming up.
Yeah, do we have any high impact news events that's coming up that
Yeah. I'm sorry. Say that again.
I was just wondering if we had any major news events that were coming up, if
Yeah.
Trump
And
was
I
going to do
mean,
another 45-minute infomercial or not.
yeah. Yeah. I mean, you got initial claims on Thursday. That may or may not do something. And then you
Mm.
got home sales, but honestly, I don't really see anything that would really have a strong impact on the market. So I think what will impact the market mostly will be comments from the White House at this point for right now. That's the way I see it. Um, but we are in earnings week. So let's take a look at who's reporting this week to see if there's any bell cows in this, because you had the banks report last week, um, but I don't really see anybody um, that would be earth shattering that everybody would be glued into the TV to try.
Yeah, the only thing that I would be paying attention to right now when I'm looking at the news calendar, but when it comes to like tools that we use, right? A website that I use personally is called Forex Factory, and
Mm,
it takes all the different currencies that people might trade, so like the Canadian dollar, the European, or even the Japanese yen, the British pound, and it takes all the currency news events that can impact, and it categorizes the high impact from the least impactful. The only thing that I can personally see coming up this week would be crude oil. They're doing
mm,
crude oil inventories, and it's because of what's going on over there in the Strait, and they're talking about closing and opening and like tariffs for people to pass through. So that's going to be interesting. You do got unemployment claims coming up on Thursday,
hmm.
but let's just not ignore the fact that we've been bombing the Middle East here every day for the last 5 days. So everyone's pretty much going to be sitting on the sidelines trying to wait to see what's going to happen as far as retaliation because Iran said that there's no ceasefire. Any
Right,
agreements that we had, it's off the table. So
right,
uh, I would definitely look out for any tweets or any events like that. You got Russia on standby, you got warships in the sea. I mean, everyone's kind of on the edge right now to see if things are going to escalate this next
right.
couple of days.
Well, I think the only really two I see here is initial claims and continuing claims to get a gauge
Hmm.
on what's going on with the consumer. If these numbers come in hot, that could indicate some weakness in the economy. So that's going to be
Hmm.
interesting to see. The last time that they reported, they really didn't come in too hot, but there's a chance that that may change. So people are probably going to be watching that up leading up to Thursday. So, in my opinion, okay, all right. So, with that, that's what we see as the market going forward and what you can keep your eye on. So you have a training a trading course or subscription. You want to plug your business right now?
Yeah. So we're building a platform right now. It's a community built for traders by traders, and a little bit about myself. I've been trading for going on a decade now, and it's gotten out of hand. The demand is there for a lot of people that want to learn, but I'm only one person. I can only teach so many people in a 24-hour day. So I decided to recruit and train a couple analysts that can do live trading throughout the day. So not only are you going to have lessons throughout the week, you're going to have a teacher that's going to have a curriculum, you're going to have a syllabus, so you know what topics we're going to cover throughout the week. But you get to see these traders implement the same strategies that I teach throughout the day for a 2 hour period, starting at market open until about 10 o'clock, right before lunchtime for the East Coast for the New York Stock Exchange. So that's something I'm getting ready to launch. It's called Trader Village. I'll be getting ready to launch the wait list, so we'll be able to plug it into the description for anybody that might be interested. But I'm really excited for that one because that's going to change a lot of people's lives for sure.
Absolutely, and that's what this is about. It's about changing people's lives to show you that there's more out there for more opportunities to have you learn how to put your money to work to create generational wealth for not only you but your family, and to also, which is big for me, is to teach your family, your sons,
Mhm.
your daughters, these money management techniques and systems that they can create for themselves because it is not taught in school, people. Hear me clearly.
Mhm.
This information is not taught in school. The things that we just went over, Faison and I just went over, people pay thousands of dollars to learn it. I just gave it to you for free. If you look through the playlist for this channel, all of the information as far as how to interpret the indicators, how to set up your brokerage account, how to invest your money, how to do your first trade. It's all in the content. For those of you who are new to this channel, you have to go through the playlist so that you can learn it. For those of you who've been rocking with me so far, I appreciate it. Tell your friends, tell your family. And you don't have to pay thousands of dollars. I'm giving it away, this information and this knowledge for free. Okay. I also have a book out there, and you'll see that as well. It's called Get Good with Money. It's available on Amazon. It is also available at Barnes and Noble, and soon it will be an audiobook. So as you're at work, driving to work, or while you're on your job, you can just listen to it. However you listen to your content. I realize that nowadays that people are not so much into turning pages, but they like to have the book read to them, which is fine. And I'm going to present that opportunity for you to absorb and learn this information that way. I also am asking if this content is of interest to you, you want to receive more of it, want to be notified when another video drops, please hit the like and subscribe button. That would really help me out. It would also pass the word, get the word passed around to others that may be interested in this kind of information as well. All right. So with that, I want to thank Faison for joining us. This ain't going to be the last time that you see him. You will see him from time to time when he can fit me in his schedule to share information, and we can go over this advanced technical analysis to go through um, and understand. I also have a couple other people that I've lined up as guest hosts that would also be able to give the options point of view, and I'll always be here to give you the long-term investor point of view as well. Okay, so with that, Faizan, thank you for joining me. All right, and
Absolutely.
and for the rest of you, I will see you on the next one. Take care, everybody.